Okay, good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at Options Play. And today we have a very special session here on trading Bitcoin options in 2025. A lot of interest from traders with regards to Bitcoin as an asset class. We certainly have seen the recent rise in yields reflect kind of some concerns around kind of the size of the US debt load and what that means for the US dollar, and a lot of interest around cryptocurrencies and alternative asset classes to kind of potentially hedge some of those risks. So what we want to talk about here today are how you can potentially gain exposure to Bitcoin, or rather cryptocurrency asset class, using options, and what are the different pardon the pun, what are the different options that you have, going over them so that you understand the pros and cons of each one and show you kind of how you can trade it using your first trade platform. So before we get started, what we are going to discuss here today is purely for demonstration, education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we'll be using as example purposes during today's session. So what we'll start off with is taking a look at kind of the Bitcoin analysis, kind of where we currently stand with Bitcoin on both the daily and weekly chart. We'll take a look at kind of some of the technical analysis around that. Then we'll take a look at kind of depending on whether you typically take a short or a long-term outlook on different asset classes, how you might want to think about cryptocurrencies in terms of their outlook. And then I want to talk a little bit about what considerations you should have when you're thinking about what the different products that are available for you to get exposure to Bitcoin, how you should think about or what criteria should you be thinking about to understand what's the best product for you and your trading account? And then we'll talk a little bit about the different option products that are currently out there that would give you access to Bitcoin. What are the pros and cons of each one, so that you can make a decision for yourself as far as what's suitable for you? And then at the very end, I'll open this up for Q&A. But the primary thing that I want you to be able to walk away from today's session is a clear understanding as to what products are available to help you gain exposure to Bitcoin utilizing options. So if we take a look at a chart here for Bitcoin, what we see here is really an asset that has been, if you look at this over the past year or so, it's been range bound for most part of the year between roughly 55,000 and 75,000. It's been pretty much the better half of this past year in this trading range before breaking out here basically on the November 6th election, where it broke out above that range. And we basically traded all the way up to around just shy of $110,000 on Bitcoin on this particular asset. And at the moment, it's looking like it's formed a bit of a base here around $90,000 and has formed a bit of a top here around $102,000. Right now, we're pushing just around $100,000 right now on the back of the CPI print here today. And for bulls here, what we really want to see is a bit of consolidation, right? Because after a big move, it's typically healthy to see a bit of consolidation. And then what you really want to see for bulls is a breakout here to the upside. And flip on the contrary, if let's say you are a bear of cryptocurrencies and you don't believe in Bitcoin, you want to see a breakdown here below $90,000. And you can view this a few different ways. You can think about this as what looks like a bit of a head and shoulders top, but in order for that head and shoulders top, in order to complete, you got to have a breakdown here below $90,000. We haven't seen that yet, so I wouldn't call this a head and shoulders yet. I think at the meantime, I think it's probably more appropriate to say this is an asset that's currently range bound between 90,000 and 100,000, and you really want to see a meaningful break above 100,000. At the moment, we're just trading up around $99,000 at the moment here for Bitcoin. So that's kind of looking at this on a shorter term basis. If you want to look at this on a longer term basis, this is what it looks like on a weekly chart here. So that $55,000 to $75,000 range was basically right here that I was talking about, the better half of this year, and we've kind of gotten that breakout here to the upside. But if you look at a longer term chart here, this is the longer term chart here of Bitcoin going back 4 years. what you see here is that the recent breakout here, what we made is a higher high in price. We did not make a higher high in terms of momentum, and that negative divergence could be a bit of a concern for traders in the short run. That could lead us to see some of that kind of head and shoulders pattern complete, and see get a little bit of pullback here to maybe around that $75,000 level, where that might be a potential better risk to reward entry for those of you that take a longer term view on different asset classes. But so right now, I think the thought here is that if it trades between 90 and 100,000. There's not a lot of momentum here. It's better to potentially wait for a breakout above 100,000 or a breakdown below 90,000 to take a directional view. Otherwise, we're very much in a kind of a range bound movement here right now with regards to Bitcoin. So that's kind of a bit of a short-term and long-term view here from a technical perspective on Bitcoin. So if you're thinking about trading Bitcoin, if you're thinking about getting exposure to Bitcoin, on the short-term side of things, this is a fairly volatile asset that is typically suitable for technical analysis. And what's really interesting about Bitcoin is that it's a truly 24/7 asset class, unlike other assets like stocks or even futures, where they trade either from Monday through Friday or Sunday through Friday, sometimes for 8 hours a day, or sometimes as many as 23 hours a day, depending on the product. Bitcoin truly trades 24/7. And what that means is that it's a great asset class from a technical perspective, a technical analysis perspective, because the markets never close. You don't have any gaps in your charts unless there was a true price gap. So these are asset classes that are really fantastic for traders who like to use technical analysis to gauge a directional view, do your charting, put on your indicators, and kind of from those indicators gauge a directional view. So if you're a short-term trader, we tend to find technical analysis on many different time frames, everything from minute-based charts, hour-based charts, daily charts, even weekly charts, are fantastic tools to help you gauge that directional view here for trading cryptocurrencies, or specifically Bitcoin. Now, if you're a longer term investor, this is really kind of where you want to think about kind of the US dollar, right? Because the Bitcoin, number one, Bitcoin is priced in US dollars, at least kind of what we're trading here, even though you can price Bitcoin in other currencies, but predominantly trading in Bitcoin is against the US dollar. And also, you can think of Bitcoin as sort of the antithesis to the US dollar to some degree, right? Because the US dollar, the Fed can continue to print dollars over and over again, to the point where the dollar is continue to devalue the dollar, versus Bitcoin is in theory finite in terms of the number of coins that are available. Only 21 million Bitcoins that are available, as part of the code. So it kind of is a way to potentially be an antidote against fiat currency. So traders that take a long-term view on Bitcoin tend to be traders that are potentially short the dollar, and they're diversifying away from hard assets like gold and hard assets. So, if you're thinking about Bitcoin from a longer term perspective, those are the kind of the fundamental stories that might encourage you to potentially get exposure to Bitcoin. And then the risks, and with any investment, there are risks, right? So one of the things that you want to think about is just potential obsolescence with quantum computing, even though I don't necessarily believe in that risk that some people have been spewing over the last few weeks, few months, with regards to the current advancements in quantum computing. I feel like we've been talking about quantum computing for the better part of 2 or 3 decades now, and we really have made virtually very little actual progress, practical process progress from a quantum computing perspective. I don't necessarily think that in the next year or two we're going to make some significant breakthrough that's going to break the cryptology that, or the blockchain technology that Bitcoin is built on. But if it does happen, that is certainly one of the key risks, because that would completely destroy kind of the cryptology that Bitcoin is secured against. And then also, other crypto assets is also something to consider, because Bitcoin is fundamentally itself doesn't have any value other than the value that we as investors or traders give it, right? Versus you have other types of cryptocurrencies like Ethereum that has some fundamental value to what they do. So those are some of the things that you do want to consider, whether you're short term and long term, and what kind of risks you might have with regards to these types of investments, especially here for the long run. Okay. So with that, what I want to do is, take a look at the different products that you can get exposure to Bitcoin utilizing options and, the different types of considerations you should think about to determine what's the right product for you. And I think at the very well, the most critical element, in my opinion, for these types of decisions is typically around liquidity. Liquidity should probably be, in my opinion, your number one concern when you're thinking about uh, exposure to Bitcoin utilizing options. Outside of that, you want to think about, what hours can you trade these specific products? What is the availability of the different contracts? How many, are there weekly expirations available? Are there lots of strike prices that are available? So that you can find the expiration and strike price that meets your specific needs. What are the delivery types? Is it physical delivery? Is it cash settled? What is the underlying asset? What is the correlation to the actual Bitcoin itself? What types of accounts are you required to have in order to trade these specific products? What availability do the accounts have? And then, lastly, taxes, right? So these are all the different things that I think you might want to consider and think about when you're trying to decide what's the right product. So this is the lens that we're going to be looking at different products that I'll introduce during today's session um, to better understand what might be the best product for you. Okay, so what I'm going to start off with are some of the products that are available and help you better understand the pros and cons. So one of the first listed products in the US that give you exposure to Bitcoin were Bitcoin futures on CME. Each Bitcoin future represents 5 Bitcoins. It's a futures product that's existed for multiple years now, and they recently launched options on those futures contracts. And the pros to those specific products is that number one, futures are trading 23 hours a day, 5 days a week. So you have a very wide variety of trading hours are available to trade these Bitcoin futures. You can trade them in any futures account. They have a tax advantage because they're a 1256 contract, so very similar to index options here in the US. And I think one of the great features about this specific contract is it actually tracks the price of Bitcoin futures, and Bitcoin futures, track the spot price of Bitcoin very closely. So, it makes it easy to trade it because selecting strike prices are pretty straightforward. There's strike prices that you recognize if you're following the price of Bitcoin. So if you want to buy an at the money call, you buy $100,000 call option. So it's easy to kind of calculate the right strike prices depending on where you think the Bitcoin prices will go. Um, However, there are some major drawbacks here to this specific product. The number one is the simply lack of liquidity. Number one, there are only monthly expirations available because there's not a lot of volume traded in this product, and there's very little volume, and it simply lacks liquidity. And just on that alone, from my perspective, disqualifies it as a product for me, right? The fact that there's very little volume, if you look at the monthly expirations, there are, a dozen contracts or so that are open interest, a dozen contracts that are traded a day. It's really nothing in terms of volume, and there's not enough liquidity, in my opinion, to justify trading. And there's exercise risk. If you get assigned on a option contract, you are basically either long or short 5 Bitcoin futures, or 5 Bitcoins, a single futures contract for every contract that you are buying and selling that option on. So there's a fair amount of exposure and risk that you're taking on when you're trading these types of products, right? But it is available for those of you that do want to trade, on, that have a futures account and you want to get access to Bitcoin futures. It is technically a product that you can trade and get access to Bitcoin utilizing options. Not one that I typically recommend, just one because they are very large in size, typically more suitable for institutional traders. The liquidity is not there at the moment, so I just don't think it's the right product for most retail traders. The second product that recently was just launched here, this was just launched in December, are cash settled index options that the SIBO has listed. And the symbol for that is CBTX. And what it is, it's an index that tracks a basket of Bitcoin ETFs. Right. So there are plenty of Bitcoin ETFs. What they basically created was an index that tracks a basket of these ETFs, and you can now trade index options on that. You can trade on that basket of ETF options. And the pros of that particular product is that it trades just like any index option, like SPX. You can trade it in your US options account. They technically are a Section 1256 contract as well, which means that you have a tax advantage. And the cash settlement at expiration makes it really clean to trade this because you don't ever have to worry about exercise and assignment risk. You don't ever have to worry about being long or short Bitcoin as a result of an assignment or exercise. So, whatever P&L you have on the options trade at expiration is just settled in cash, makes it really easy and clean to trade these specific products. Um, the downside to this at the moment, and the biggest one, is also just the lack of liquidity. This is the newly listed product, and there's no liquidity in it at all. There's very little volume. There's most brokerage platforms don't even carry this just yet. So it's a very new product, and most brokers have not enabled trading for this product just yet, including first trade. So, from my perspective, some of the other cons is that it doesn't actually track Bitcoin. It tracks a basket of Bitcoin ETFs, which has a very high correlation to Bitcoin in itself. But it's not you're not actually getting exposure to Bitcoin itself, and that's okay because of the high correlation. But it's important to understand what the actual underlying is. Right now, there's limited option contracts with no volume, and I always find some of the challenges with these types of indices is that it tracks the price of the index, not Bitcoin, right? And I think if you look at the index itself, it's sitting around $2,600 or something like that is the index valued. So, when Bitcoin's at 100,000, but the index is at 2,600, it takes a little bit of mental math to figure out what's the right strike price. So if you think Bitcoin's going to go from 100,000 to 110,000 and you want to put on a spread, you have to do a little bit of mental math to figure out what's the right strike price to spread, 100 to 100, 110 versus 2,600 and what the equivalent of like a 10% move is to calculate the right strike price there. So it's just an added step that you need to do in order to select the right strike price on a trade when you're trading something that's correlated to correlated to Bitcoin, but is not actually priced in what Bitcoin is priced. Okay, so that's the second product that you can potentially get exposure technically to Bitcoin utilizing options. And then the third product, which is one that probably most of you will most likely end up using, which is an actual Bitcoin ETF that has listed options on it. And I'll use IBIT as an example because it is one of the only Bitcoin ETFs that have listed options on it. So the pros and cons for this particular product is that number one, it's liquid, it's small, and it's standardized. So it trades just like any stock or ETF option, right? So if you are currently trading stocks or ETF options in your account, it trades just like SPY or QQQ, ETF options. So easy to understand, easy to correlate if you're already trading options on those specific types of ETFs. They are very liquid, and currently they offer both weekly and monthly contracts, which means that you can be very selective in picking the right expiration date that suits your specific needs for trading. You can trade this in your current US options account. So if you have an options account at First Trade, you can start trading these today. And they are low priced. IBIT is currently priced at Let's pull up a live quote here. Um, IBIT is currently trading at $56. So it's a very low price ETF, which means that you have a lot of flexibility for small accounts, right? Unlike Bitcoin that's at 100,000, a single Bitcoin notional value is very large. Here, you can effectively um, get exposure to an ETF that's priced around $5,600 for every 100 shares of it. So the notional value of ETF of each option contract is only 5,600 versus half a million dollars for, let's say, the futures contract, or a quarter of $1 million for the index option. So if you have a small account, you just have a lot more flexibility to be able to trade small size, or even if you have a large account, you have the flexibility to size in and out because the option contracts are relatively small in size. Okay. The biggest con that I have with trading IBIT is the fact that it's very highly correlated to Bitcoin, but the price of the ETF has nothing to do with the price of Bitcoin, right? So Bitcoin's currently at 100,000, the ETF's at $56. If you think Bitcoin's going to reach, let's say, $110,000 and you want to put on a vertical spread, if you were trading something that tracked Bitcoin, you'd say, okay, I buy that 100,000 strike and sell that $110,000 strike. Easy to pick your strike prices. On IBIT, you have to do a little bit of mental math to figure out, okay, what's the right strike price to sell if Bitcoin reaches $110,000? So you kind of have to do some ratio analysis. You probably have to, pull up an Excel spreadsheet, write some simple formulas to help you pick the right strike price when you're picking target prices and you're trying to figure out what levels to sell, right? So if you want to sell a put option near support, you have to figure out what that support level correlates to in terms of IBIT. That is kind of the biggest drawback, in my opinion, to trading Bitcoin through one of these Bitcoin ETFs is the mental math that you have to do to select the right strike price. It is only available to trade during US hours, right? So Bitcoin trades 24/7. You have big moves that happen, over the weekend, overnight. When you're trading Bitcoin options using IBIT, you can only get exposure during the hours of the US equity markets. So that is a little bit of a limitation here for a lot of traders. That's only 7.5 hours of the day that you can trade these. So that is one thing that you should be familiar with. And then lastly, you do have exercise risk in IBIT shares. So if you end up owning if you have a if you have a position in that's short an option in IBIT and that short option either gets assigned early or exercised at expiration, you effectively either are and will end up either long or short the ETF as a result of that, right? And there are easy ways to avoid that by managing your trades before expiration, well before expiration. But that is still an overall risk that not necessarily everyone wants to take. There are many ways to mitigate that risk, but it's a risk that you need to be aware of if you are trading um, things on these types of ETFs. So that in a nutshell is kind of the current range of products in the US that you can get exposure to Bitcoin utilizing options on futures, the cash settled index option that Sibo just listed last month, and IBIT. And again, out of those three products, the only one that currently trades any significant volume are these ETF options. So if you are trading this here in the US in your options account, my preference would be these ETF options. They're small, they're standardized, they're liquid. The only drawback is that you have to do a little bit of math to figure out the right strike prices. If you are, if you're using, important levels on Bitcoin to try to figure out, the appropriate strike prices to buy or sell. Okay. But both of these are products that you can trade today using First Trade. So I'll kind of bring up the First Trade platform here. I'll first show you IBIT in the options play platform, right? This is a free tool that you have access to as part of your First Trade subscription, as part of your First Trade account. It's free of charge. You can find it under the options wizard section, which I'll show you here in a couple of minutes as far as how to access it. But if you want to get access to if you want to trade Bitcoin options using IBIT, you type in IBIT as a symbol here into options play, and then depending on whether you're bullish, bearish, or maybe if you think the implied volatility on Bitcoin are relatively high, right now IB rank is 33 out of 100. We can help you structure, option strategies on that specific ETF, right? So for example, if let's say you think that Bitcoin's going to break out to above 100,000, you might want to look at maybe buying something like a March 56 by 70 call spread here, risking 417 to potentially make 983 if if IBIT's above $70, right? So you have to figure out kind of what does $70 equate to in terms of Bitcoin, and then figure out kind of what is that price and whether or not you think Bitcoin will reach that price by that March expiration. But basically, this tool helps you structure trades, helps you compare and contrast depending on where you think Bitcoin will be. If you think Bitcoin will hit $65, or IBIT will hit $65 by expiration, what do you make if you had bought the call option? What do you make if you bought the call spread? What would you make if you just bought the ETF? Compare and contrast these three strategies side by side and see which one suits you. And if you want to trade, a specific strategy, you can click on the trade button, hit the preview order button, and what that will do is that will actually pre-fill an order ticket for you in First Trade's order entry system. So as you can see, it already has the IBIT March 56 by 70 call spread, and I can simply put this in as a at the midpoint, maybe at 413, and send this off for execution. So this makes it really easy. And as you can see, the options wizard is something that you can find on your first trade screens. You can find it on your home screen. You can find it under the trading screen. And this options wizard will bring up the options play tool that you can use to structure an options trade. Analyze the options trade, make sure you understand the potential risks and rewards before you execute the trade, and options play will help you pre-fill your order ticket so that you can send it off for execution in just a couple of seconds without having to manually enter the order into your platform. So you can use options play to help you find and structure the right option strategy for IBIT. Or you can simply just type in IBIT into the quote bar here at the bottom, and that will allow you to bring up an options chain that you can use and take a look at the different expirations, the different strike prices, and use that to help you select your option strategies that you might want to trade. So that is a summary of kind of what I wanted to share with you here today. Liquidity in hours is by far kind of the most important thing I think you should be concerned about. IBIT certainly offers the best liquidity, but is different in terms of the trading hours. In terms of tracking the underlying Bitcoin futures, give you the most direct correlation to the price of Bitcoin. But all three products are very highly correlated, so you're going to get the same correlation. And then settlement, IBIT and futures, give you a settlement into the underlying versus the cash settled index option is fully cash settled. So those are some of the considerations that you should be aware of and the different products that you might want to utilize. But I think for most traders, most retail traders, IBIT would be the right product in terms of fit, in terms of size, in terms of liquidity at the moment. Maybe sometime in the future, as those index options take off or those Bitcoin futures take off, those might be better products. But for now, the ETF options, I think, are best suited for most retail traders. So with that, thank you so much for your time. What I'll do is I'll open this up for Q&A. If you have any questions, feel free to type your questions into the Q&A window, and I'll try to answer as many questions as possible before I sign off. Now, there's a Q&A window at the bottom of your screen. If you want to bring that up, you can type your questions there, and I'll try to answer any questions. How about MSTR options? So remember that MSTR, is also another potential uh, Another potential product that you can get exposure to Bitcoin. It's a bit more leveraged, but it definitely gives you access to it. Let's take a look at kind of where MSCR options are in terms of liquidity. MicroStrategy. So, this looks pretty liquid here as well, right? You're getting a lot, you're getting decent volume in the front month. This is the January front month expirations. You're getting a good amount of volume. You go out to the weeklies, you're still getting a few hundred contracts, uh, a few thousand contracts per weekly expiration. The biggest challenge that I think for MicroStrategy ETFs, MicroStrategy is the fact that it's a $300 ETF versus a $56 ETF, right? So they're all equally correlated to Bitcoin. So, if you have a much larger account, maybe you might want to trade MicroStrategy ETF. But if you have a smaller account, I think the IBIT is a better from a tracking perspective. I do believe that um, and here's the other thing, right? Is that MicroStrategy is very different from the perspective is they're using debt to buy Bitcoin, right? And that could very much blow up in their faces, meaning you could have MicroStrategy effectively blow up, even though Bitcoin hasn't blown up, right? So you have a very different risk for MicroStrategy as you do with IBIT versus, IBIT basically just holds Bitcoins, right? MicroStrategy is funding the purchase of Bitcoin using debt. So that is a completely different leverage play on Bitcoin. A leverage play that has significant downside risks if things were to unravel. So um, that's the reason that I don't think MicroStrategy is the right way to say you want to get exposure to Bitcoin. I think MicroStrategy is more of a more speculative play on Bitcoin because you do have that downside risk that if MicroStrategy were to default on their debt, the ETF value would effectively go to zero, right? Even though Bitcoin hasn't gone to zero. So there's an added risk there. IBIT trading hours are different. No, it's the same trading hours as any other Bitcoin, any other ETF. There's a few people asking about other ETFs. BITU. I'm not familiar with that specific ETF, but it looks like they only have monthly expirations. Very little volume, very little open interest. So I certainly don't think that I would trade that. Certainly not when you have IBIT as an option, right? That's far more liquid. MSTX. I'm not familiar with that either. STX, the volume on this is a little bit better than the other symbol that someone suggested, but still very, very different from iBit. So I think that if your choices are between these, I would definitely trade iBit just from a liquidity perspective. Um, yes, this is recorded. Um, So which one had the highest correlation? Most of these have correlations that are in the 99% range, so it really doesn't matter whether it's a 99 or 98. So I actually don't think correlation matters that much. Most of these are correlated in the 99% range because they're effectively just holding Bitcoin. Any other questions? So if MSTX and SMST are leveraged Bitcoin ETFs, then yeah, you can simply just buy and being long or short the shares themselves instead of the option. Yeah, you absolutely can. Options just give you the optionality to sell premium, collect income, even if Bitcoin doesn't move, so it's a different type of strategy altogether. Any other questions? Yeah, there are some options on those ETFs, but they have very little open interest and volume, so I don't think I would recommend trading those. Bitcoin's already a pretty volatile asset, so if you're already trading a leverage ETF, unless you're just looking for ungodly amounts of leverage, I don't think you need to necessarily add on to that leverage by trading options on those leverage ETFs. Generally speaking, I don't recommend trading options on leverage ETFs in general, and certainly not on Bitcoin. If there are no other questions, I just want to thank everyone for taking the time out here this afternoon. I hope this is helpful in giving you a better understanding of what you have available to you to get exposure to Bitcoin utilizing options. Pretty straightforward. At this moment, Bitcoin IBIT is really the only ETF that's truly liquid that I think is suitable for most uh, retail investors. Hopefully, sometime in the future that will expand, but at the moment, that's what we have. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here next time.